diesel prices are $1 less than they were a year ago. Are we in good shape?
Compared to last year, it may feel like you're in good shape, but you also need to remember that diesel fuel just in the last 30 days has rallied about $1 a gallon, Stu.
Since the 1st of July.
Since the July 4th weekend. You may not recognize this, but the futures market has rallied probably 60 cents in the last 3 weeks. But back in July 12th, the Chicago refinery market for diesel fuel was trading about 65 cents under the futures market, making the cash 65 cents cheaper than where it would normally trade. Then you started getting all this real hot weather, not only through the south, but here it came into the Midwest, started working its way to the east, and then everybody had to start turning up the thermostats on their air conditioning. Well, because of all this clean air and zero emissions by 2030, a lot of these coal plants, instead of states like Illinois putting money into them, they've let them go down or shut them down. So now you've got to buy electricity somewhere else or generate it from some other fashion. That meant diesel fuel. All of a sudden, diesel fuel demand really starts to surge, and any excess capacity we had from last year's warm winter got burned up here in the last 30 days for this hot, dry weather.
So we're running electric power plants with diesel fuel?
All this electric generation backup supply to keep cooling. It takes 30% more electricity to cool these houses and all these big office buildings versus trying to keep them warm in the winter. So, you go through these winters the last 2 years, you've had these big polar vortex that go clear down into Houston and get really cold, and everybody has to turn up their thermostats, and then it overpowers the grid. Then it knocks out the electricity that runs the natural gas pumps and the refineries, and then all of a sudden everything shuts down, right? Now you got a major cut in supply. Well, that's been happening this summer. You got to think about how much heat these refineries put out anyway, right? Then it gets even hotter with this real hot weather we've had. And then a lot of these refineries have been going down, losing capacity. And so now all the excess diesel supply has been kind of sucked up, through the trucks, not to mention in the generation supply.
So we are going into a heavy diesel use season with a shorter supply.
Yes, sir. We're about ready to start fall or harvest in 30 days. Demand's going to start taking another big spike. You're going to start seeing farmers order this fuel to get it out to the farm, and they're going to get a sticker shock from probably where they were 30 days ago. And I look for diesel fuel to be probably tight, and I even look for it to probably go up maybe another 50 cents a gallon as we go into harvest.
So is this the time we should be buying it? Should we buy enough for spring? What as a farmer and a fuel price expert, what would you do to manage your risk as far as diesel fuel on the farm?
Well, I'd call my supplier right now, and I'd probably go ahead and get some booked and do a fixed price contract for fall. At least fix a large portion of your upside price risk. There is some potential that the market will go down, but I don't think you'll see it in the next 30 to 60 days when you're really going to need the fuel. There is still some threat of a recession on the consumer side. But even this week, you had the Bank of America and J.P. Morgan lift their economic forecast for the recession, stating that I doubt it'll be very serious or that we'll even go back into one. And a lot of that's because of the Biden administration pumping all that money into the economy for the infrastructure, like roads and bridges. So it's coming into the market, causing inflation, but yet the high interest rates are killing the American consumer to where they can't spend. So eventually, one will offset the other. And I think eventually, many more months down the road, the American consumer will run out of cash. And then you'll have a bigger drop in the markets. But that may not be till late this year.
What should farmers be looking at in the futures market as far as places on the web that they can see where price trends are going?
A good one that you could go to is barchart.com. Go to the energy tab, and then you can look at diesel fuel prices. You could probably even scroll down on the left side, and you'll see a place that says cash markets. And if you click on that, it starts out with cash markets for corn and soybeans and wheat. But if you scroll down a little bit further, you'll run into the cash markets for the petroleum, gasoline, and diesel fuel. And you'll be able to see it by region, the state of Illinois. And Illinois is in what's called the PAD 2 district. and you can even look at the cash prices there as well.
Any other ways that farmers can manage their risk as far as energy on the farm?
Um,
How about propane?
Sure, propane. Very good question, Stu. I'm glad you brought that up. I think propane was very undervalued this summer. At one time, it was trading at probably less than 40% the value of crude oil. And now that winter's starting to come up, I'd definitely get your propane booked just to be able to have it capped on the upside price risk. It's done going down, and winter's coming, so go ahead and get your propane prices capped through next spring, next March or April.
Even though we don't know whether we're going to have wet corn this fall to dry, but at least that's protecting it then?
That'll protect the upside price risk, and for the next 60 to 90 days, I really don't see a huge downside in risk doing that. You have to remember last year, propane and diesel fuel were also competing with natural gas in Europe because things got so expensive. Even though natural gas is still pretty cheap this year, all of a sudden diesel fuel and propane have gotten a lot tighter in the market. So I don't quite understand where that tightness is coming from, other than the heat for the summer and the strong, it's not the economy, because you're not seeing a lot, Yellow Freight has even gone bankrupt. But you're going to see other trucking firms pick that up. But the demand is still fairly decent, but ending stocks are still very tight for diesel fuel. Now propane, there is plenty of ending stocks at the moment, but it's going to follow crude this time of year.